Hello and welcome to our daily market analysis, where we deep dive into 28 different charts to bring you the latest in stocks, indices, commodities, Forex and crypto. If you're looking to stay ahead in the trading and investing game, you're in the right place. Don't forget to smash that like button, subscribe for more insights and ring that notification bell so you never miss out. Let's run the numbers. If you've ever bought at the top and sold at the bottom, you know how important market timing is, and we have a free printable template at CTKSMethod.org. You can pop across there and get one of these sheets that you can fill out yourself. In the past 24 hours, I put out another beta in development sheet. It's not available yet at CTKSMethod.org, but as soon as it goes through its process, it will be. What is different in this beta upgrade? You can see bear and bull price estimates for the next 24 hours. This can be really helpful, especially if you're trying to understand when things are going more negative and more positive. Right now, the focus of the markets is on the DXY. As the DXY improved, we had a run through of the dollar-yen combo. The Aussie dollar also weakened, but the euro dollar bucked the trend. It was just consolidating. The reason for this is the euro dollar is at strong structural support at the current time, and you can figure out where the structure is in step 2. The DXY is coming up because the potential probability of a rate hike is 3.7% at the next FOMC meeting of the Fed on the 13th of December, which is about 7 days away. Increased probability of a rate hike drives the DXY up and the yields up. We're not seeing that confirmation in the US 10-year. We're seeing pretty much the opposite, but we are seeing US 2-year strength. Oil is so much under pressure at the moment, it's just literally falling off a cliff. One thing that you can also see, as gold came into very solid structural support, it bounced from a negative case to a neutral case. By understanding where CTKS structure is, you literally get X-ray vision inside the market. Also, as gold followed through, silver just follows gold. As the DXY rallied, what we saw was broad-based declines across the S&P 500, total crypto market cap, Bitcoin, and many of the alts. One thing to note, as the DXY is moving up and the yields are potentially turning the corner, we need to keep our eye on the VIX. The VIX currently has underpinning structural support. That's not so good, and it's consolidating but mildly positive. When the yields come up and the DXY comes up, we can expect retracements or consolidations in the major indices. One thing to note, there's a fresh air gap, a negative fresh air gap on the Nasdaq. If the Nasdaq loses its bear case, it could drop significantly. This will catch the market by surprise. Structure explains why certain stocks and certain charts, commodities and cryptos, behave in the way that they do. We can see that Microsoft is still doing incredibly well. It's gone from a consolidation case up to a mildly positive case. And we can see Nvidia is also looking to turn the corner. Tesla is powering on. It's mildly positive and it's improving. Apple got a little bit too overextended. It's just coming back at the moment. The reason that we look at all of this, the yields and the DXY, including the Forex pairs, and commodities such as gold and silver, give us a very good indication if the main markets will rally. If the main markets rally, it will flow through to crypto. If they tank, that will flow through to crypto as well. Typically, what people do is just say, oh, I'm just going to trade Doge, and I'm going to look at Doge and Doge only. You realistically need to get your market timing right. Look at all of these other charts. If you do so, your trades and investments on Doge will be breakthrough trades and investments. And I'm not just talking about Doge, of course. You could be in XRP or Litecoin or Cardano or Solana, Ethereum, Bitcoin. Whatever it is, Bitcoin and total crypto market cap cannot escape the stock market's gravity. The stock market cannot escape the gravity of the DXY and yields. All charts are intercorrelated and interconnected. Please let me know in the comments, do these targets help you out? For example, when we look at total crypto market cap, if total crypto market cap gets above 1.578 trillion, that's looking really good for crypto. But if it starts to fall below 1.528 trillion, that's not so good for crypto. We would expect the alts and Bitcoin to be hit. If Bitcoin trades above 44,802, that's looking good. But a movement below 43,284, that is not looking so good. The markets have been in a state of flux just recently, and with looking at the fear and greed indices, right now crypto is 72, stocks are 63. They were both higher in the past 24 hours. I've been talking recently about XRP. I am currently accumulating. We accumulate on the negative downside. We buy on red and we sell on green for a required return on investment. Thank you to everybody inside the service who responded to my question, how much in crypto are you? For the majority of the service people, it's pretty much all in crypto. I'm right there with you. And when you buy on red and you sell on green, you can do incredibly well because you're buying at a lower percentage. You're extending the percent return that you can get from the market. As a community, we take buying on red really seriously because it pays. Check this out. Since January 1993 to January 2023, an analysis was done on the S&P 500, and this is phenomenal stuff. If you bought owning the day after down days, your investment would have improved by 785%. But if you owned only after an up day, it would have improved 16.7%. You can see the difference between those two percentages. That's what's called getting on the right side of the percentage. If you're an investor and you don't trade, you need to learn how to trade because it will give your investments breakthrough potential. And if you're a trader, it's vitally important that you trade with timing. That's why we need to time the market. I'd love to hear from you in the comments below. Please share your thoughts on today's analysis, any charts that particularly caught your eye, or any queries that you might have. Unfortunately, people are not told about gross annualized return on investment and net annualized return on investment. Two very important things that you need to learn about. If you put $500 in as an investment and you received a 10% return, you got $50 back, which is your gross absolute profit or loss. The gross absolute profit or loss doesn't mean anything. This may come as a little bit of a surprise because people just focus here on the ROI, the gross absolute profit or loss, and the absolute return on investment. These are things that you shouldn't focus on. What you really need to focus on is your gross annualized return on investment and your net annualized return on investment. The net is the gross after your buy fee and your sell fee. Unfortunately, nobody talks about this. Many people think that you make profit according to where you sell. You actually don't. You make it according to where you buy. And this points it out significantly. Getting on the right side of the percentage is vital. If you're on social media, you'll see a lot of people post out big percentage gains, but these are not annualized percent gains. With smaller percentages, you can exceed this easily. What matters is the holding period and the turnover period, not this absolute amount. When it comes to dollar cost averaging in to any specific investment or trade, please make sure that you dollar cost average in on the reddest of red days. They will exponentially blow your account up to the positive side. Thank you for watching our market analysis. If you found this information valuable, please show your support by hitting that like button, leaving a comment with your insights, and subscribing for more daily updates. Have a great day or night ahead, my friends, and Kate and I look forward to catching up with you again tomorrow. Bye for now.